Welcome to the new weekly outlook, everybody. So as always, let's go ahead and start off with the fundamental analysis and then go ahead and move on to the technical side with Stefanos here.
Let's do it. Looking forward to it.
The very first thing that I want to go over here is this article about geopolitics. So we know that last week we had Pelosi going over to Taiwan, and China already had given warnings about that if Pelosi were to go to Taiwan, then they would take it as more like an escalation of what's happening, this conflict between the US and China. So what they really ended up doing after Pelosi made that trip was place sanctions on just Pelosi and like her immediate family members. And then last week, we also saw that there were some drills, military drills going on where China launched a lot of missiles and they ended up landing around, the economic zone of Japan and then also around Taiwan in general. But the sentiment that President Joe Biden here, and again, we said last week, you really don't want to be pushing China to kind of test, whether they're really going to do anything or not. But President Joe Biden is expressing that he does not think China would escalate tensions further with Taiwan after a series of military exercises, and really just that's exactly where it's going to stop. They're just going to do military exercises, and he doesn't think that they're going to do anything more. But once again, you don't really want to be testing a country like that. That this is something very similar when the Russia-Ukraine war was happening. Same sentiment was being put out. We don't think Russia is going to be, doing anything, or they're really not going to move past these military exercises. And then now you have like a full-blown war that is still continuing, and we're going to get to that in just a little bit in the next couple of articles. But again, you don't want to be testing some of the major economies and countries of the world.
Yeah, I'm confident in Biden's analysis.
And then now moving on to the US side. So you have this sense of stagflation. For some of you guys who may not know what really stagflation is, it's really when you have high inflation, you also have unemployment that's starting to increase as well, but there's really no economic growth, or that the economic growth is very slow, right? And so that you kind of sit in this stagnant kind of a stance. So that's what really stagflation is. That's really what's happening here. The reason why I want to go over this particular article here, it doesn't really have to do too much with, currencies or anything, but it's more on the micro level. So in the last couple of weeks, you guys have heard us talk about, look at the micro level, right? You've heard us talk about in the weekly outlooks and even on the Wednesday live sessions that there is a sentiment that is being put out there by a lot of these central bank officials when it comes to, recession, and they're really saying that, hey, we're not in a recession because we're seeing the strong data points from like the labor market and then also from like the sales, this and that. So taking all that apart, I want you guys as investors, traders, consumers, whoever, who's really watching this, I want you to take a look at the actual micro data that's actually being put out there. So, kind of put all the speeches and everything that central bank officials are coming out and saying, the White House is coming out and saying, but look at what's happening in the economy. So right now, we had earnings seasons going on, right? And when you're looking at a lot of these major companies, a lot of the major companies are doing layoffs, right? When you're looking at earnings season, yes, it tends to fluctuate. No one can really predict that like 100%. But a lot of these major companies are also, they're missing their earning target that has been set out. And then when you start to look at consumers in general, and very first thing, let me back up. The sentiment here is that, yes, there is some sort of a progression happening for some companies that are, above and beyond this earning projection that was put out for them. But a lot of that is coming from the sales growth, but it's not a healthy sales growth because that is coming from inflation, not necessarily consumer confidence to go out and spend more money. So really all that's happened here is that prices have increased, and that's where a lot of the sales growth is coming from. It's not really coming from consumers coming into stores or shops or anything in flocks and just buying up things because the demand is exceeding the supply. It's not like that. Instead, what you're starting to see is the opposite, where the consumers are losing their purchasing power, and you're starting to see that they're starting to tap into any savings that they had in the last 2 years because of the pandemic, because of the money that was pretty much given to them. They're already starting to tap into that, and they're really stretching their dollar at this point, right? So you're starting to see this consumer confidence starting to drop down, and you can see that being reflected and throughout all the different economic data points, whether you're looking at consumer confidence, whether you're looking at earnings, whether you're looking at the labor market, and really looking at how a lot of the companies are starting to do layoffs and a lot of people are there being unemployed. a lot of people, when you look at initial jobless claims, which pretty much comes out every Thursday, instead of just looking at that, also look at how many people are continuously applying for unemployment and they're still on the unemployment benefits, right? Just because you don't see those numbers coming out every single week does not mean that it's not there anymore. It just means that there are more people being added to unemployment. So I want you guys to really pay attention to micro data points that are coming out, because all of this is eventually going to get translated into that high impact data that we look at, into CPI that comes out, into those interest rates that are coming out, into those monetary policies, everything like that.
It's like all underlying data, underlying stats, and just feelings of the and sentiment of the market.
Absolutely.
All telling signs.
Absolutely. And so as you continue down throughout this article, you're going to start to see some more of these details where a lot of the retailers are finding that the demand is so weak that now they have to instead cut their prices. And that's what a lot of these major companies are doing as well. So there's a lot of things that you can look at when it comes to the micro data points of what these companies are doing within the country, and you will start to understand, how does this reflect into the bigger picture. Now, moving on to the UK, you have a 280 billion pound bill as energy suppliers collapse. So pretty much what's going on here is that all those prices and the hit that a lot of these electricity distribution businesses are taking is now going to be passed on to the customers. We've talked about that many times, where if a business has to pay a lot more for its services or its product or anything like that to manufacture it, it's always going to get passed down to the consumers. There has been, multiple different examples. But if you guys are still unsure, just reach out to us and we'd be more than happy to explain it to you in depth. Just to keep this kind of short and concise, we see the same exact situation going on in the UK, where there's high inflation, and then also you're starting to see how the market demand is starting to drop down as well when it comes to a lot of different sectors from the consumer aspect, and then you will see the same spiral happening in that economy as well. One other thing that I want to go over is when you go down here in the UK economy probably entered its worst slump since lockdown. This is just further evidence that you're starting to see the consumer confidence starting to drop down, the consumer demand starting to drop down, and essentially now you're leading into this a sense of a recession in the UK as well. And as you're getting closer to the winter, you're going to see the same exact thing happening in Europe because of their gas crisis and their energy crisis that's going on because of the Russia-Ukraine war, and the fact that Europe is trying to move off of any energy supplies that Russia has to provide. They're completely trying to shut that down and move on to other alternatives. So when you look at the overall picture, when you're looking at global macroeconomics and global markets in general, you see that a lot of the major countries are going through the same exact thing, which is high inflation and also potential recessions to combat that high inflation. And then the last article, and then we'll move on to the economic calendar quickly and then move on to technical analysis, is the Ukraine getting more assistance from the US. So here, the U.S. announced another $4 billion in additional direct budgetary support to Ukraine and $1 billion more in military aid drawn from existing Pentagon inventory. So the war is still continuing, and there's still more aid that's being provided by the U.S. To Ukraine in order to kind of help them throughout this war. Now, moving on to the economic calendar pretty quickly, not much has happened so far in the markets. We started off quite easy. Today's quite an easy Asian session as well. Going into London tomorrow, you don't really have too much coming out, or even in the US session, but there are micro data points that you guys should be watching out for, and that's the prelim non-farm productivity, along with the economic optimism of what's pretty much going on here. As soon as you see this dropping down below 50, again, that shows that there's pessimism in the industry, and this is based on surveyed consumers. So as soon as this drops below 50, you know that there's not a lot of optimism into the markets, and that's how it's been since May. As you can see, that's really when we dropped down significantly from that 45.5 to 41.2, and it's kind of been fluctuating below that number ever since. And then going into London session on Wednesday, same thing, not too much coming out, but CPI is coming out in New York session, and that's something to watch out for. Can we see more inflation, or are we sitting in the stagflation part where this inflation is also, not increasing at higher levels compared to last time? where we've had a massive increase, or are we just going to see it at sitting at pretty much the same level that it is at right now, given that we have had aggressive interest rate hikes the past couple of months? And this is going to be very important too for further interest rate news that will be coming out, whether the central bank is going to be increasing interest rates, and then also what happens from the monetary aspect as well. And then going into Thursday, you have PPI coming out. So that's inflation from the producer's perspective. If you see this number higher than CPI, understand that the producers are eating up a lot more costs that have yet to be passed down to the consumers. And it happens through this entire process. It eventually gets trickled down. And you saw an article, we kind of just went over this. We just saw an article here that says that, that's pretty much what's going to be happening, where a lot of there are a lot of costs that the producers were eating up that have eventually yet to be passed down to the consumers. And then you have, sorry, go ahead.
Sorry, just to touch on that, I was watching a few videos of these farmers talking about, buying livestock and stuff like that. And one of them was saying, like, a few years ago, this one bag, 2 years ago, this one bag of feed cost me $4, and the other bag, I forget what it was, cost me $6. Now what she was saying is that the bag of feed was $20 and the other one was $22. So like, that's just an example of, like, they're incurring all these costs. At some point they're going to be passing it on to us.
Absolutely. And then on pre-London session on Thursday, we have GDP data coming out from the UK, a ton of GDP data coming out in general. But if we do tap back into this negative, then we know that we are just going to continue into this into this recession. That's pretty much where we are at, because in May and June, when you look at the true definition of a recession, the UK had already entered into a recession. They've already had 2 consecutive negative GDP here. And so can we eventually just see this continuing into negative? And that will, again, be relayed into a hit when it comes to the pound. Plus, given the fact that Bank of England came out last week and already put out the sentiment, that's going to be a long recession, right? And we already saw how the market had already reacted to that. And then to end off on Friday, you have the consumer sentiment coming out. And as soon as we drop below 50 here, same thing as we talked about previously in the week, same thing, where as soon as you drop below 50, it's pessimism. And that tells you something about the consumers. They're not confident in the economic outlook, and they're going to behave like they're not confident economic outlook. We're all consumers, so think about it. I'm just going to leave out this question for you. If you knew that in the next 6 months, in the next year, things are going to get more expensive, you don't have a lot of purchasing power, you don't have a lot of confidence in the economy, what are you going to do as a consumer right now? Right? And think about, if whatever your answer is, I bet you millions of other people are going to do the same exact thing. Now, with that being said, I'm going to pass it over to Stefanos. Go for it.
Thank you so much. Always doing a great job. All right, let's break down the charts over here, starting with GJ. Looking at the weekly over here. So if you take a look, just gonna grab this arrow here. Last week, the weekly candle ended up tapping back into that 160 area, right? Holding support and rejecting, and also closing bullish right over here. So we're still consolidating over here on a higher time frame basis, but is this a deep enough retracement for price to continue up? With now we're retracing Japanese yen, right? Japanese yen is on its way back down again as of this morning. So looking at the new weekly candle, I know we are ranging on the lower time frames, but this weekly candle did create a bottom wick, created a top wick as well, and now it's kind of like a doji candle. So where is this going to go? Could we be retesting the previous support over here to hold a resistance and continue down and fill that wick? Most certainly, right? Especially if they end up, further feeding the flames of having a pretty deep recession. If they keep coming out with that sentiment, you're going to see, this pair on its way down, more people having fear, investing into the Japanese yen. Looking at the daily over here. So daily, I'm just going to mark off a few levels. We have this resistance that price has been rejecting multiple times since making lower highs, since the yearly highs up here around 168. We ended up tapping here for the final time, right? Strong bearish move coming down to hold that low. We ended up holding support over here, right? Strong bullish candle, holding support, price continuing up. But are we rejecting this area right around here, that previous support, right? We got a weak bullish candle. We could be rejecting this whole area as a whole right here. and then continuing back down and getting a move coming back down to that 160 area? Or are we just getting that retracement, holding support in this area, right? And then continuing back up to possibly tap into 166 again, or even possibly come back into this area, consolidate a little bit, retest that area, and then continue back down from there. So it's just a short-term correction to continue back down. But at the same time, you know, when it comes to that, you got GJ, which has been extremely bullish since COVID, right? And we've just been making corrections on our way up over here. So that tells me that we're just kind of correcting. We're in this consolidation phase, trying to wait out what's going to end up happening with the Great Britain economy, also the Japanese yen as well. You know, it really depends on what goes on in these countries, obviously. Looking at the 4 hour now we can start to see these rejections. We have previous support, resistance, rejection right over here, and then we kept rejecting this area. It looked like we were holding a higher low right back down around 161 area, holding that higher low, pushing up, couldn't break the resistance over here, and now we ended up rejecting multiple times with that wick, and especially this bearish candle over here. So are we now going to hold some kind of a resistance here to continue there, or continue down and continue to consolidate? All right, looking at the 1 hour now. 1 hour, obviously we're sitting in a range right now. We pretty much got that area around 162,500. You know, we bring this over to the left over here. It's not going to be exact. Right, price is just kind of holding that area right there, and then we ended up rejecting here. But since tapping into 163,700 here, we've been making these lower highs, right? So the question is, where do you want to end up trading? If we break that resistance up here around 163,700, I think you'll have safer buys coming back up into this area right here, which is our previous resistance. And you got about 72 pips to take a nice scalp right in that area, right? I wouldn't be trading anything in here really. And then you got a clean move right over here, our support down here of about 120 pips. Again, I'd be careful in this area, right? On the 4 hour, you really don't know what's going to happen. You need a nice close below the area if you think price is going to come back down to 161,500 or 161 flat. Right now, we are holding a nice support. Previous 4 hour candle did close a strong bullish candle, but you know, there's no clear direction here, so we don't know where we're going. Looking at the 30-minute, let's adjust this trend line here. Again, lower highs being formed. You do have a little support right over here. Do you want to trade in this? I probably wouldn't. You know, it's an Asian session. It's Monday. You guys want to be more conservative with the way you guys trade. I would say we could put our zone right there. You get that previous support, resistance right here, rejections in that area. Do you have enough range for you to trade in here? Got about 32 pips. I don't know. It's up to you, right? To me, I'd rather probably wait. You do have some nice moves to kind of combat that sentiment. You got nice moves here to the left that you could possibly be mirroring. But again, I'd really rather wait for tomorrow or Wednesday to be taking some trades and wait for areas like this and this to be trading in, right? There's no need to force anything. One thing I was going over with my group is the fact that the market takes the money from the people that are impatient and it gives it to the people that are patient, right? So just keep that in mind when you're taking a trade or taking an experiment trade. Be smart when it comes to trading in some of these zones, especially out of the New York or the London session. All right, looking at gold over here. One thing that I found interesting is this is a trend line that I've had. You guys have seen me use for you know, a couple months now, where we were respecting this area, right? We ended up breaking out, and this could definitely be the correct trend line. We don't know, but the most important confirmation is support and resistance. That's the main thing that you guys are paying attention to. Trend lines are really subjective. But what I was playing around with this morning was, you know, could we be bouncing off this area? You have this wick right there. You have these wicks over here. This wick rejected, and now we're bouncing off with this key area of 1680 right in this area and bouncing off that area. All right, so could we be holding support? And then once we break that support right over here, if we hold a resistance, and that truly is the trend line that I previously had right here, if we're coming up to retest that area, hold a resistance in here and continue down, will this maybe be the safer sells coming back down to that area to mirror the move that we had back in 2013 when they were increasing rates, right? We were going into a market recovery and continuing down, increasing rates right here. So, is that actually going to happen? Are we going to have a nice market recovery, or, we're going to hit a nasty recession where people are going to be investing back into gold, more fear in the market, pushing price right back up from that key area here and continuing up, right? Or is this all the priced in price action right here from increasing rates? Looking at the daily now, again, since those all-time highs that we retested, we've been printing lower highs and lower lows. Ended up breaking out of here last week. Right, we broke back above 1750, that previous area right over here. We have that strong consolidation, that strong range that we're now right back in. Ended up holding a higher low with this bullish candle right here. Filled the wick with this candle, filled that wick as well. Right, so now it looks like we're holding a support at that previous resistance right over here with a strong bullish candle close. Right, so where are we going from here? So far on the daily, it looks like we have that previous support in this area that we could be pushing up into. So let's see if we get some kind of a move that you could possibly take through 1800 and approaching 1810. I'm gonna just look at the left over here. You do have this zone I've been marking off multiple times. This wick actually wicked into it, but you got that wick support, high demand area from here and here. It was a resistance for about 2 weeks right over here, and it was also a support. You could still drag that to the left as well. Right, so it's just an area to keep in mind that we did end up closing above on the daily right here. So could we be coming down with this candle to retest that area, hold the support somewhere in here, pass the high of that candle, and continue up through 1800 and back into that support? Again, with a further fear in the market with China, Taiwan, obviously Russia, Ukraine, but also a lot of the rate hikes possibly being priced in. But a lot has to do with CPI coming out this week. So we could very well consolidate until then. All right, so now I just want to adjust this area a little bit. We got that higher low over here, price holding support, respected it, and continue right back up. This is that area I was just talking about. Just going to keep that thin right here. But we did end up closing above there. I don't like having that there. It's kind of messy. What we can do is just draw like a horizontal line there. That might look a little bit better for you. But we had this higher low formed right above 1750, around 1755. Pushed up, created a new high, came down, higher low, right? Respected that low, continued right back up. So right now, we're kind of above that level, but we're a little overextended here. I could very well see us getting a further pullback over here as these candles get a little bit weaker, right? I could very well see a pullback and then a continuation back up, like some kind of another higher low formed in this area for price to keep pushing back up. Or, we end up rejecting this area over here and forming a lower high over here, could we continue to consolidate until Wednesday? We see the 1 hour. So the 1 hour is holding a support in this area, as you guys can see. Again, it's a little messy, but we are holding support. Got all these wicks. This looks like a consolidation to me, so I kind of want to stay out of this. Not kind of, but definitely. And you got that zone. If price continues up, again, we're pretty extended over here, right? We corrected this whole move right here, pretty extended. Can we get that pullback to continue up, or are we just going to continue up from here? Looking at the 30-minute, again, I want price to close above this area on the 30-minute, right? For price to continue up, could possibly catch a quick scalp coming into this area around, let me move the video, coming into 1792 and then eventually 1795 over here if we just continue to form higher lows and higher highs. Right? Just again, be careful. If we do get that break of that support right there, you got clean moves here to the left that you could be mirroring in this area and taking price right back down, doing the same exact thing. Let's take a look at got about 50 pips in here, so you can definitely grab something there. Again, we keep rejecting this level, right? Multiple times. So that should be a sign right there that we could be coming down, but don't just try to take a sell from up here. Wait for this level to break and then take this thing down from there.
Absolutely. And this could end up happening, in Asian session, you could just see it consolidating, or maybe in the next hour and a half or so is when the Tokyo Stock Exchange opens up. So maybe you could see some volume kicking in there, but just reference to the left of whatever has happened. Look at how price was holding onto that same area, which is now resistance, as support. And then price just melted down from there, right? Exactly.
Yep.
And so you want to use, those kind of movements and kind of figure out like how you're going to set up your trades. That huge meltdown happened right in New York session, like pre-New York session. So maybe that's exactly what's going to end up happening here.
And just to play like devil's advocate real quick, this move up here, see how price came up and then ended up closing above this level. And then you got the perfect retest to bring price right back up to 95, right? So if we get something like that, expect some kind of a retest and maybe you could get the same exact thing.
Absolutely.
It could go either way. Just clear yourself out of this area, right? Don't even look at it and wait for price to close outside of it.
Absolutely.
All right, guys. So, thank you for hopping on here and taking in some of the analysis. Hopefully you guys got a lot out of that. But please, if you guys could share this, if you guys have family, friends, anybody trying to make money, anybody trying to learn a skill, even more importantly, and build a passion in something, or you feel like this is something they need, spread the word, right? We're doing everything that we can and, trying to get more people involved and educated, most importantly, in the market. So if you know anybody at all, just send them our way. We'll either hop on a Zoom with them or they could join the boot camp and learn all the basics of Forex. It's kind of like a one-stop shop for them. Just spread the word. That's all we ask.
100%. Other than that, trade safe, everybody. We're going to see you guys on Wednesday at 5 a.m. PST, which is 8 a.m. Eastern time. And also the boot camp, the signups will be over on Saturday, this upcoming Saturday on the 13th at 5 p.m. PST. We will not be intaking any more signups for the boot camp for this quarter after that date. So if you guys want to sign up, make sure that you sign up before then. The link, again, if you go under the community tab under my YouTube, there is a link there. Just click on that, fill out the form, and then you can also make the payment on www.SharmaFX.com, and you're pretty much set from there. And then if you have any other questions, just feel free to reach out to either of us about that. Other than that, we'll see you guys on Wednesday. Have a great week, everybody. Trade safe. And as always, you have any questions, always feel free to reach out.
Have a good one, guys.